They cut through the noise, yeah, and really get a handle on what's behind some of the big market stories.
Hmm.
Well, that's exactly what we're doing today. We're taking a deep dive into private equity
Right.
and exploring some really interesting, maybe surprising connections it might have to companies like AMC and GME, the ones everyone talks about.
Absolutely. And our jumping off point for this is a YouTube video transcript. It's from Marantz Rantz called AMC and GME Connect the Dots Part 2.
Yeah, and this video, it asks some, let's say, intriguing questions about the sort of financial undercurrents that aren't always obvious.
And what's interesting is how it uses one event, the death of Thomas H. Lee, the finance guy, as a starting point
Right?
to kind of map out this much bigger network of players and, their history together. It's like pulling on one thread and finding this whole complex web.
Exactly. So just to be clear, our goal here isn't to prove or disprove anything in the video.
No, not taking sides.
No. We're just trying to unpack the main connections and the suggestions it makes. So we'll start with Thomas H. Lee, some early deals.
Mm-hmm.
Then look at the Carlyle Group, its government ties, which are pretty well known.
Yeah.
Touch on how private equity basically works. And then the big part, the alleged links between all this and AMC and GME.
Basically tracing the lines the video draws.
Yeah, exactly.
And tracing the line.
And stepping back, understanding these potential links, even if they're just suggestions from the video, it gives you a richer picture, doesn't it?
For sure.
About forces that might be influencing these companies beyond just the daily stock price. It makes you look a bit deeper.
Okay, so let's dive in. Thomas H. Lee, the video creator, apparently started digging after Lee passed away.
Right.
And one early deal that jumps out is from, 1996. Lee teams up with Mitt Romney and Bain Capital.
Mm-hmm. Bain, big name.
They buy TRW, a credit reporting company, for $1.1 billion. Now, here's the wild part.
Uh-huh.
They sell it just 7 weeks later for $1.7 billion.
7 weeks, incredibly fast. It's a huge return rate, so quickly. What does a deal like that signal?
Well, that kind of speed and profit, it's definitely characteristic of some private equity plays.
Right.
They spot something they think is undervalued, maybe you make some quick changes, and then cash out. The video creator clearly flags that TRW deal as, significant.
And the video also throws in this little detail, almost a side note, that Lee used to golf with Bill Clinton.
Okay.
It's small, but it kind of highlights the circles these people move in, doesn't it? The access.
Yeah, the networks are key. And it doesn't stop with Lee. The video talks about people like Glenn Hutchins leaving Lee's firm to co-found Silver Lake Partners.
Ah, Silver Lake, another big one.
Exactly. It shows how interconnected these firms are. It's like they branch off, but the roots are all kind of tangled together.
It's like a family tree of finance firms.
Sort of, yeah. You see that a lot. People spin off, start new firms, but they often keep those old connections, which makes the whole network really powerful.
Which leads us right into the Carlyle Group. The video really emphasizes Carlyle's reputation for, deep government connections.
That's definitely their calling card, you could say.
And here's where it gets very controversial, something that's been talked about a lot over the years.
Correct.
The video mentions Carlyle hosting a member of the bin Laden family as a guest of honor at a meeting on September 11th, 2001.
Wow, okay. That timing is...
Yeah. The video creator says he got that from Michael Moore, but also says he's not a fan of Moore. So, presenting the info, but distancing himself a bit. What do we make of a detail like that?
It's certainly explosive.
Yeah.
And it definitely highlights these really complex, sometimes uncomfortable links between global finance, politics, geopolitics.
Yeah.
It's important to say, being a guest doesn't automatically mean anything sinister about that specific day.
Of course not.
But the timing, the name. It obviously creates a very striking and, frankly, sensitive picture.
Absolutely. And the video doesn't stop there with Carlyle's connections. It names George Bush Sr. and James Baker, former Secretary of State, as advisors.
Right, big political figures.
And then Frank Carlucci, he was Secretary of Defense under Reagan, apparently roommates with Donald Rumsfeld.
Okay.
And Carlucci was chairman of Carlyle from 92 to 2003. It really paints that picture of the revolving door,
Yeah, that term comes up a lot. People moving between top government jobs and lucrative private sector roles, especially in finance and defense.
What's the significance usually attributed to that?
Well, the idea or the concern is about access and influence.
Mm-hmm.
People coming from government might bring connections, insights into policy, help navigate regulation.
Right, open doors.
Exactly. And conversely, these firms offer very attractive opportunities for people leaving public service. It's a dynamic that always raises questions about potential conflicts of interest.
Okay, so we've got all these big names, these interconnected firms. Maybe let's pause and just clarify the basic private equity playbook as the video describes it.
Good idea.
Yeah.
So fundamentally, these firms buy companies,
Right.
often using a lot of borrowed money. That's the leverage part, though the video doesn't stress the term leveraged buyout.
Got it. Debt-fueled acquisitions.
Often, yes.
Yeah.
They take the company private, off the stock market. The goal is then to improve its operations or finances.
Streamline it, cut costs, maybe.
Could be. Or grow it, make strategic changes. Then eventually they aim to sell it or take it public again in an IPO
To cash out.
to realize their
Right.
profit, yeah. And the video creator makes this point, or critique, really,
Which is?
that this model can end up meaning that the public investors who buy into the IPO are, in a way, funding the profits the private equity firm already made.
How so? Explain that a bit.
Well, the argument is that the PE firm uses debt to buy the company, potentially loads the company up with that debt. When it goes public again, that debt might still be on the company's books. So the new public shareholders are now invested in a company that carries that burden, while the PE firm walks away with the profits from the improvements or financial engineering they did while it was private.
Okay, I see the critique there. Public investors potentially left holding the bag, or at least the debt.
That's one perspective on it, yes.
All right, now let's pivot to the part that probably got a lot of people clicking on that original video.
Mhm.
The supposed links to AMC and GME.
Right, the main event for many.
The video suggests something interesting.
Yeah.
That all the intense focus on Citadel, Ken Griffin, maybe that's a bit of a misdirection.
A distraction.
Yeah, maybe. And that maybe private equity firms like Apollo or Bain, again, could be pulling strings more quietly behind the scenes.
Okay, so shifting the focus.
And the creator emphasizes, look at the board of directors. That's where you see the real direction, the real influence. Why is the board so critical?
Well, the board is fundamentally responsible for overseeing the company.
Right, hiring and firing the CEO, et cetera.
Exactly. They set strategy, approve major decisions.
Yeah.
So who sits on that board? Their backgrounds, their connections. They can tell you a lot about the company's priorities and potentially who has influence over it.
The video makes a quick mention of KKR and Carlyle having been involved with GameStop in the past. Says GameStop kicked them out. Doesn't elaborate much, but it's a historical tidbit.
Interesting footnote, yeah. Shows these firms have been in this space before.
Then it focuses hard on AMC. It alleges Apollo owned a piece of AMC way back when it first went public.
Okay, early involvement.
How might that early stake still be relevant today, potentially?
Well, early investors, especially PE firms, can shape a lot. The initial strategy, the financial setup, even who gets put in management early on.
Right.
And sometimes, even after they sell down their stake, they might maintain relationships, maybe keep a board seat, or just have lingering influence.
Which brings us to Adam Aron. He's the CEO and chairman of AMC now.
Very visible figure.
The video points out he didn't become chairman until 2021, and it connects this to his previous job as CEO of Vail Resorts.
Okay, Vail, where's the link?
Thomas H. Lee, the guy whose death sparked the video. He was on the Vail Resorts board while Aron was CEO.
Ah, okay, so they overlapped.
Yes. And the video makes a point of Aron apparently not making any public comment when Lee died. And it kind of questions, what was their relationship really like? Why the silence?
Well, given they worked together on a board, you might expect some acknowledgement. Silence could mean anything, of course. A distant relationship, or something the video creator wants us to think is more complex.
It's definitely presented as a point to ponder. Then the video digs into the Centricus acquisition core deal. That involved Aron.
Right, the SPAC deal.
Yeah. And the video says, look, everyone focused on potential Citadel links there, but check out the advisors.
The lawyers, the bankers.
Exactly. Sidley Austin, White & Case, JP Morgan, Deutsche Bank. The video argues these firms have really strong established ties to Apollo. So the suggestion is maybe the real connection to Aron through this deal wasn't Citadel, but Apollo. How indicative are the advisors usually?
Well, advisor choices aren't random in big deals.
Right.
Firms do tend to work with the same lawyers and bankers repeatedly.
Yeah.
They have trusted relationships. So yeah, looking at the advisors can sometimes give you clues about who the main players pulling the strings might be. It's part of the puzzle.
And the video gives a concrete example. A guy named Angelo, former partner at Latham & Watkins law firm, now a managing director at Apollo.
Right, showing that movement between the legal financial world, and the PE firms themselves. It's a pretty tight-knit world.
Absolutely. That emphasizes the interconnectedness.
That expertise flows back and forth.
So putting it all together, the video's core argument seems to be that Apollo might have been instrumental in getting Adam Aron onto the AMC board via that centric assessback.
That's the suggestion, yeah.
Yeah.
A significant claim.
It even says the founding fathers of private equity have ties to AMC. And the creator thinks all the hype about short squeezes might be, maybe intentionally, distracting people
Distracting from what, exactly?
from this longer-term, more strategic influence of private equity within AMC and maybe GME too. What do you think about that idea, the short squeeze focus being a potential distraction?
It's a provocative thought. Short squeezes are dramatic, they grab headlines, create intense retail interest.
For sure.
It's certainly possible that focusing only on that very specific, often short-term market mechanic could make people miss bigger, slower-moving strategic plays by major institutional players like PE firms.
Yeah, the underlying ownership and control questions.
Exactly. Who's really steering the ship long-term versus who's just reacting to daily price moves?
The video uses this analogy, calls private equity a cash cow,
Okay.
and says it often thrives in situations involving distressed credit, companies with lots of debt, basically.
Right. Turnaround situations or companies struggling financially.
And it notes AMC's big debt load, its struggle for profitability. Then it suggests things like the APE shares, the AMC preferred equity unit.
The APEs.
Controversial.
That maybe even that was part of the bigger PE strategy. Why would PE be interested in distressed companies, and how could something like APEs fit in?
Well, distressed situations can mean buying assets cheap. That's the opportunity.
Buy low.
Buy low, yeah. If the PE firm believes it can fix the company, restructure the debt, improve operations, there's potential for huge returns.
Okay.
As for something like the APE units, without knowing the specifics of Apollo's alleged plan, it's hard to say for sure. But generally, things like preferred equity can be tools for raising capital, maybe managing debt, changing the capital structure. They offer flexibility.
Could be part of a complex financial restructuring then.
Potentially, yes. It could fit into a larger playbook aimed at ultimately maximizing the PE firm's return, perhaps at the expense of other stakeholders, depending on how it's structured. So let's try to wrap this up. This deep dive, based on the Marantz video, it's laid out this alleged web, right?
Lots of threads.
Connecting PE firms, powerful individuals, government ties, past deals, and suggesting these threads might lead right to the doorstep of companies like AMC.
Yeah, the core idea is that maybe the public focus has been on one thing, while these other, perhaps more significant PE influences have been at play.
But we absolutely have to stress again, this is one analysis.
Crucial point. It's based on interpretation, connecting publicly available dots. It's complex stuff.
Proving direct cause and effect, or the real extent of any influence, that would take a lot more digging, independent investigation.
Definitely. Treat it as a perspective, a set of questions raised.
Right. But hopefully, for you listening, someone trying to get a deeper understanding, this is offered a different angle.
Yeah, maybe a valuable one.
It really highlights why it's important to look past just the daily headlines sometimes. Consider the big players, their histories, their potential motivations.
And tying back to avoiding that feeling of information overload.
Yeah.
Knowing about these potential underlying structures and influences can help you filter the noise a bit.
Yeah.
Focus on maybe bigger strategic questions rather than just the minute-by-minute ticker watching. It encourages a more holistic view.
Okay, so let's leave our listeners with a final thought, a question to chew on.
Right.
Given these alleged connections and just the basic way private equity operates, what could be the long-term implications for regular investors in public companies like these?
Good question.
And maybe what other questions does this raise for you about who really owns and influences these major companies? We definitely encourage you to keep exploring, research these names, these firms, and, connect your own dots.